Alright, so we'll start off the next chapter. This session is all about these three chapters: set off and carry forward, capital gains and salaries. Let's see how we do this. So we're moving ahead to set off and carry forward, one of my favorite chapters because it has a very good shortcut associated to it. Whenever we have an income, you are taxed, and hence the government says that don't worry, if you happen to have a loss, we can set it off and you will be taxed only on the net amount. This is called set off. When you do it in the current year, it's called set off. But if in this year you don't have enough, then you can take it to the next year and you can carry it forward, and that is called carry forward and set off. So the difference in the terminology is set off happens in the current year, you carry it forward and you set it off in the next year. So that's the different terminology. So the chapter's name is called set off and carry forward of losses. Till now we've only focused on incomes, whether it is income on house property, whether it's income from other sources, whether it's profit and losses from business and profession. Absolutely right, Abhi. So all this was only focusing on income. This is the only one which focuses on losses, and this entire chapter works through the example of a blood bank. Guys, whenever you require blood, the first thing that you will do, step one, is you will go to your family members. Yes, you will go to your family and you will ask your family that, hey family members, can you give me some blood? I need blood. Our family members of course will be happy to help you, but unless you have a very unique blood, in that case your family members will not be able to help you. So that is the first step. You will go to your family. If your family is able to help you, then no problem, life is okay, good. But if they are not able to help you, then you will move towards step number 2, that is you will go outside your house and you will knock on people's doors, your neighbors. So you will knock on your neighbors' doors and you will ask them that, listen, can you give me blood? Again guys, your neighbors will be happy to help. Some neighbors or some of y'all are very friendly, you can knock on every door. Some of y'all don't talk to anyone. There are people in our societies who don't talk to others. So in neighbors we have semi-friendly, friendly, non-friendly neighbors. And again, if your blood is unique and your family cannot give you the blood, how can your neighbors give you the blood? So this is the second way of getting your blood, and this both happens in the current financial year or the previous year. And if this is also not enough, only then you go to step number 3, is you go back to the next year. You go to the next year and you go back to your family, you go back to your house and you stay in that house till you can get your blood required. So family, then neighbors, and back to the same family. Guys, this is called set off and carry forward, and these are the free 3 steps. The same 3 steps are also in the chapter. So first let's understand which other heads can you make losses. So this is the surgeon. He had a job with Delhi Development Authority from which he got some salaries. But in salaries, can you have a loss? No, because in salaries either you will get salary or you will not get. There can never be a loss from salaries. In house property, can you have a loss? Yes. Remember guys, house property has 3 deductions. Municipal tax, you won't have a loss because of that. But because of 24B mainly, you can have a loss. Yes, you can have a loss in house property. And loss means blood requirement. Next, in PGBP, there are different kinds of businesses. One is the normal business or non-speculative business. Let's call it normal business. Can you have a loss in your business, guys? So many people have losses. Air India has only had losses. So can you have losses? Yes. In speculative business, that is when you're buying and selling, the government does not like this. Can you have losses in this? Yes. But this loss is a unique blood or a unique loss. In your specified business, example, those which the government tells you to develop, like hotel, hospital, etc., can you have a loss? Yes. Again, this is also a very unique blood or unique loss. Then you have capital gains. In capital gains or capital loss, can you have long-term capital loss. We don't know, we've not done this chapter, but long-term means any asset that you hold for long. Can you make a loss? Example, you buy some shares today, you hold them for long period of time and then make a loss? Yes. And can you have a short-term capital loss? That means you buy something today and sell it after few days. Can you have a loss here? Again, this one has unique blood. Yes. In IFOS, generally there is interest income, there is dividend income, etc. So you don't have a chance of making too much losses in IFOS. But there is an activity which is very unique activity, you should know about it. The activity of owning and maintaining race horses. Guys, in the races you need horses which are very expensive to maintain. So if you maintain them and you make them race, that is your expense. Yes, if the horse wins, then you get a big prize money, so that's your income. But guys, if the horse is just doing some sightseeing, he forgets to run around, then you lose and you make a loss. Yes, we'll call that business horses. And in that case, this is a unique blood. Yes. Guys, if I just go betting on horses, or if I just go on betting on anything, can I minus any deductions? No, you've already seen that in IFOS. It's disallowed, no expense allowed. So if I go bet on horses, I bet 1 lakh rupee on a horse and the horse does not win. Can I minus that 1 lakh? Can I take a deduction? No. So only if you do the activity of owning and maintaining race horses, only then it is a business, which is an IFOS. Particularly this is only in IFOS. Yes, only in IFOS. Owning and maintaining race horses, from which today onwards we'll call them horses. And that is a unique blood. Can you have a loss there? Yes. Besides that, you can, in business, you can also have unabsorbed depreciation, which we will talk about soon, but this is your scenario for losses. Here, can I go to the first step? That is, can I go within my head, within my family to take a loss? Salaries will not require step 1. House property, can they go within the family? Yes, they can. So they can take use of step 1. Can normal business go to other heads within the family? Yes. Other incomes? Yes. But can speculative business and can specified business go to other heads? No, because they have unique. Can they go within the same head? No, because they have unique blood. Can capital gain go within the same blood? Short term can, but long term can't. Guys, unique blood means you can't go to anyone else. You have to be with yourself. You will not talk to anyone. You will not take blood from anyone. So step 1 everyone can take. Yes, everyone can take step 1. Except the 4 unique bloods, everyone can take step 1. But let's say step 1 is not enough and there is still blood requirement left. Can I go to step 2? Let's see. Will salaries ever have to go and knock on neighbors' doors? No, it will never require step 2. Can house property can house property loss be set off? Can house property go to other people and knock? Yes, it's a very friendly head. People who are new to this shortcut, wait, just be very patient and you will get the shortcut very soon. House property is a very friendly head. What I mean by friendly head is if they have a blood requirement, they can knock on every door possible. Yes, but only up to 2 lakhs. That means they are friendly, but they are shy. Shy as in that means they can go and ask for blood only up to 2 lakhs per annum. Yes. Next, guys, is PGBP. Can PGBP go outside? Of course, the unique blood can't go outside. So the other than unique blood, can they go outside? Yes, but they are a semi-friendly head. What is semi-friendly? They had a fight with salary, so they don't talk to salary, so they don't knock on their door. Can they knock on house property door? Yes. Can they knock on capital gain door? Yes. Can they knock on IFOS door? Yes. Capital gain, can they knock? No, guys. Capital gain is that non-friendly family who doesn't talk to anyone, so they don't go to anyone. And can horses go outside? No, again, horses is unique blood, so they can't go outside. So this is step number 2, where you step outside your house and you knock on people's door. Friendly but shy, semi-friendly and non-friendly. But guys, if intra head, that means within the head, and inter head does not work, or if it's not enough, then in the next year, can you carry it forward, your loss, your blood requirement to the next year? Yes, but next year you have to be within the same head. Will salaries require step 3? No. Will house property have next year? Yes, but guys, next year it's almost like a quarantine stamp. Here you are stamped, guys. In a quarantine stamp, guys, can you step out of your house? No. So whenever you go to step number 3, guys, people who are new to the shortcut, this might seem very different, but don't worry, hear me till the end, see the questions, and you'll be well versed with this shortcut. So in step number 3, can you go outside, can you carry it forward? Yes, but you'll have to stay within your house. That means house property will be within house property, PGBP only within PGBP, capital gain only within, anyways capital gain doesn't go out, and IFOS anyways doesn't go out. So you have to be within your same family. Yes, because you have a quarantine stamp and you can't go outside. Alright, here please remember a couple of other things also. So I'm just going to the next page. Now guys, enough of concepts. Let's see a normal sum. Let's see there is a salary income. If they give you computed, then write the entire amount. If they say not computed, then you will minus SAP minus SEP, which you will see in salaries head. Let's say the salary income is 10 lakhs. Your house property, you have a loss from house property of 2,10,000. Your PGBP, you have a normal business loss of, let's say, 1 lakh rupees, and you have a speculative business profit of 1,20,000, and you have a specified business loss of 1 lakh rupees. Capital gain, you have a long-term capital loss of 1 lakh, a short-term capital gain of 50,000, and another long-term capital gain of 75,000. This is the loss. And in horses, you have a loss of 75,000, but you also have a KBC income of 10 lakh rupees. You won a KBC or you won in the lottery for 10 lakh rupees. Now guys, some rules. First, did you get lucky with 10 lakhs? Yes. If you have got lucky with 10 lakhs, the government says if you got lucky, even I want to get lucky. This KBC income, you don't get any reductions, you don't get any set off, you can't even use your basic exemption limit, nothing. Guys, please repeat with me. Have you got lucky in KBC or in lottery or in any winnings? Yes. If you've got lucky, will the government also want to get lucky? Yes. Will they allow you to minus any deductions, any expenses, any set off of losses like this? Any basic exemption limit? No. So on that 10 lakh, they want 30% flat. Yes, no questions asked. Always remember, no one can touch this KBC income. I put it in a box. Box means I will tax it. Now guys, step 1, within the family. Will salary need to go within the family? No. Will house property need to go within the family? Yes, but they don't have any family members, so they can't go. Can normal business loss, speculative business profit, and speculative specified business loss? Guys, here do you see any unique loss? Yes, this loss is unique blood. What about this? This could be unique, but it has a profit. When you have a profit, you don't focus in it. Guys, blood banks only focus on people who need blood, not on people who have blood. And in long-term capital, you have a unique blood. Yes. Horses, you have a unique blood. I'm putting a star. Now let's move ahead. In PGBP, guys, can I go within? Do you see a loss? Yes. Do you see a blood requirement? And do you see blood? Yes. Can I take it? Can I adjust it? Yes. So from this 1 lakh, this goes away, and from this 1 lakh gets set off. So there's only 20,000. Yes, there is only 10. So that means I've minused. I've taken the loss. Focus on the loss. I've taken the loss and I've minused it from speculative business. But what about this loss? No, it is unique blood, so you can't do anything about it within the head. What about capital gain? Do you see a blood requirement in capital gain? Yes. Can it be set off against the same blood? This and long term is this. Yes. So 7,75,000. Yes. 75,000 gone. This gone to 25,000. And now can I minus this against 50? No, because this is unique blood. It can only be set off against long term. And horses also only against horses unique blood. Guys, remember, unique blood is only waiting for its own blood. Now can we go outside? Salary will not require to go outside. Can house property go outside to salaries also? Can it go outside to PGBP, capital gain also? Yes, it can go to any door except casual income. No one can go. But if its salary is close by, why not some salary? So I'll minus this 2 lakh from salary. So salary becomes 8 lakh. Why only 2 lakh? Friendly but shy. So 2 lakh gone from here. So 10,000 here loss. Yes. Always go one at a time, one step at a time. Now PGBP. Again guys, can I go outside? This is done and dusted. This is a profit. So why will I go outside? And this is unique blood. I can't go outside. And long term capital loss 25,000. Non-friendly family can't go outside. And horses is 75,000. Again unique blood can't go outside. Now guys, which one will be taxable and which will be carried forward? Salary taxable. Yes. House property, step 1 done, step 2 done, still blood requirement is there. Yes. Will you carry it forward? Yes. This underline is carry forward. Now guys, most losses can be carried forward for 8 years, not this year. After this year, 8 years, you can carry this forward. And guys, when you carry it forward, will it have a quarantine stamp? Yes. This loss, can I carry it forward? Yes. What about this profit? You will tax it in a box. Yes. But guys, certain losses can be carried forward in unlimited number of years. Specified business the government has told you to start, and hence that loss can be carried forward unlimited number of years. What about this loss? Can be carried forward? Yes, for 8 years. What about this profit? Taxable. What about this horses loss? Can be carried forward. And what about casual income? Taxable. I'll tell you carry forward for how many years, don't worry. So now what all will be taxable guys? Salary 8 lakhs. PGBP speculative business 20,000. Short term capital gain 50,000. KBC income, that is winnings, 10 lakhs. So this will be your total income. But remember, from this is as a fixed rate of 30% and maybe some other income also, but this is at a fixed rate of 30%. And which all can you carry forward? 1 I'll carry forward, 2 I'll carry forward, and 3 things I will carry forward. Now let's see how many years you can carry it forward for. So I'll just tell you how many years. On an average, 75,000. Yes, 75,000 also. Yes. On an average, you can carry forward things for 8 years. Yes. So house property can be carried forward for 8 years. Let's do it on a new page. Salary, you won't have to carry forward. House property, can you carry it forward? Yes, you can carry it forward for 8 years. Normal business also you can carry forward for 8 years. But speculative business, because the government doesn't like, you can carry it forward only for 4 years. And specified business, because the government likes it, it can be carried forward for unlimited years. Capital gain can be carried forward, yes, for 8 years. So I'm not writing when it's carried forward for 8 years because 8 is obvious. And in IFOS, horses can be carried. The government doesn't like this so much, so hence it can be carried forward for 4 years. So guys, only 3 exceptions. Horses and speculative both have a nature of speculation and hence 4 years, but specified business unlimited number of years. Now, what about unabsorbed depreciation? That depreciation which cannot be minused in the current year, can I take it forward to the next years? Yes. First up, it is taking forward to the next year, so will it have a quarantine stamp? Yes, but guys, unabsorbed depreciation is an exception. It can break the quarantine stamp, yes. It can go to any head, yes. But just like PGBP, this is also semi-friendly. there it does not talk to salaries. Everywhere else it can go to. Capital gain, sorry, casual income, no one can talk to. I repeat. If you have any unabsorbed depreciation, can it be carried forward? Yes. Unlimited, yes, because the government likes this also. You've bought assets because of which you have unabsorbed depreciation. Unlimited number of years, yes. Can it be set off against carry forward unlimited of years? Set off, yes. It can break the quarantine stamp and can go to any head. But salaries it doesn't talk to, and casual income no one talks to, because the government wants full 30% on the casual income. Now some extra points, guys. When you carry forward losses, example, I have a profit this year of 10 lakhs from my business. I have income, I have expenses after minusing everything. This is 10 lakhs. First, what do I minus from this? First, you always minus current year expenses. Everything which is current year, first you will minus. Then previous year, but previous year I also have a loss which is being carried forward, and I also have unabsorbed depreciation which is being carried forward. Let's say my loss is 8 lakhs and my unabsorbed depreciation is 7 lakhs. Which one will I minus first? Guys, your loss has an expiry period. Unabsorbed depreciation does not have any expiry period. So if you open a fridge and there are 2 chocolates, one has an expiry, one does not. Which one will you eat first? The one which is expired first. So which one will you minus 1? You will minus 8 lakh first. And then if there is scope, you will also minus 7 lakh if there is scope, but first you will minus the loss because that has an expiry. This one does not have an expiry. Alright. Can you close down a loss making business? Obviously every smart person will close down a loss making business. So if your business is loss making, you will close it down, yes. But can you carry forward that loss for other businesses to be set off? Yes. Guys, even if, as long as it's PGBP, you can carry it forward and you can minus it from other businesses, yes. So if I have a business which did not work, that loss, can I carry it forward and can I set it off against other businesses which worked? Yes. Sequence also is something that we've understood. Yeah. Let's now see the quick book, guys. Just uploading the quick book. There is not honestly much in this. All it is in the sums, the more you do sums in this, the better you get. So here is the quick book. This should be the set off chapter here somewhere. Perfect. Let's see, guys. The sections, everything I will introduce you. This entire chapter is based on a blood bank. Loss means you require blood. Blood is first taken from immediate family, then from extended family or neighbors. If blood is still required, you move to the next year and take it only from immediate family. Define intrahead means within the head, and interhead, which is one head to the other. Under salaries, there can never be a loss, hence no blood requirement. Section 70 is the first step within the head, but there are 4 losses which are unique blood, which cannot be set off even within the same head. Salary will anyways have no loss. House property, that's perfectly adjusted. Next, interhead, that means one family with the other, that is called Interhead Section 71. In that again the 4 unique bloods cannot go to other heads, neighbors, because they have unique blood. IFHP is friendly but shy. PGBP is semi-friendly, they don't talk to salaries. And capital gain is non-friendly. No adjustments to be made from casual income, no one talks to casual income. Step 3, you can carry forward the losses. House property, guys, the house number was 71B because the section is 71B. And then it's one stream. So salaries will not require step 3. House property is section 71B for 8 years. Normal business, non-speculative business is section 72, carry forward. Speculative business is 73, and specified business, which is similar because unique blood, 73A. Capital gain 74 and horses 74A. If you can remember the sections, great. Otherwise 70, 71 are step 1, step 2, and this is in a line 71B, 72, 73, 73A. 74 and 74A. In this, speculative business and horses is 4 years, and specified business is unlimited number of years, and so is unabsorbed depreciation. Guys, remember, loss is a benefit that the government is giving you, and hence, to take this benefit, if you want to carry it forward for 4 years, 8 years, unlimited number of years, you need to file your return of income on time. The government says, if I am doing so much as giving you a benefit, why don't you also do your work on time? So your return of income should be filed, and that too within due date, yes. Otherwise, section 80 says that if you don't file your return on time, these losses will go away, and that's why, guys, in every CA firm, and when you start doing articleship, you will see even loss making persons come to fill up their return, and that too they come the earliest. Why? Because they want their losses to be carried forward. Before 31st December, no, we have due dates, which we will see in return of income chapter. So before the due dates, you have to file. That is section 80. So what does section 80 say? Section 80 says that, listen, you want to carry forward your loss? Yes. Then you need to file your return of income on time. Only then, if you do your work on time, only then we will allow you to be carrying it forward. This is section 80. Except 4 losses, guys. 1, house property loss. The government says, you bought a house, I'm thankful, don't worry, even if you file your return late, or maybe even if you don't file it, we will still allow you to carry it forward. Yes. Unabsorbed depreciation, government is happy you bought assets. Scientific research expenditure which cannot be set off, you will carry it forward. And family planning expenditure. Guys, these 4 expenditures, the government is so happy you spent money on these 4 things that even if your return of income is filed late or return of income is not filed, can you still carry forward this? Yes. These 2 unlimited years, these 3, and this for 8 years. Loss can be carried forward for the next 4 years, only if ROI is filed. Extra points. If any income is exempt, very important, guys. You know exempt income, like agriculture income is exempt, 10(1). So any loss, can I carry forward that or can I set off that? No. The government says, listen, if I'm not taxing your income, why should I give you a set off or carry forward of loss? So please read this carefully. If any income is exempt, because the question exam will have loss from partnership firm. Is profit from partnership firm taxed? No, it is exempt under 10(2)(a). So loss will also not be allowed to be set off. First clubbing and then set off, guys. Once you come to 5 heads of income, then you will first do clubbing and then you will do set off. We have not done clubbing yet, we will do it today. For the same person, one business loss can be set off against other income, business income. Yes, business, same head. Under IFOS, only loss from horses business can be carried forward. Unabsorbed depreciation can be carried forward indefinitely, and they can also break the quarantine rule. They can be set off against all heads except salaries. Casual income, of course, no one can touch. Any discontinued business loss can also be set off, and there is an order of carry forward. First the current year, then you bring forward business losses of last year, first business losses, and then unabsorbed depreciation, scientific research and family planning, because they don't have any expiry. Guys, this chapter is very simple. You just need to do many sums on this. So as many sums as we can, let's try and do this. I'm just going to upload the module for this one as well. Perfect. Just uploading the file. Alright, taking you to the end, guys. One sum from this chapter is a definite in your exam. So let's do this well. Perfect. Compute the gross total income for the year from the information given below. Income from house property computed is 1,25,000. So let's draw the diagram. Guys, here we go. Let's draw the diagram. Well, 1, 2, 3, 4, 5. This is income from house property, 1,25,000, and they've already computed it. Yes. Income from business before providing for depreciation. Guys, do we need to compulsorily provide depreciation? Yes. So let's see depreciation, 26,000. Let's minus that. So 1,35,000 minus 26, so 1,09,000. So I'm just writing PGBP, and in that I'm writing normal business, 1,09,000. Next, short-term capital gains on what doesn't matter right now. So just short-term capital gains. How much is that? 56,000. Next, long-term capital loss doesn't matter on what. Long-term capital loss, whenever there is a loss which is unique, mark a star. 90,000 is unique blood. Yes. Income from tea business, you know guys, tea only 40% is PGBP taxable. So 48,000. This is also normal business, 48,000. Dividend from Indian companies. Guys, if the company carrying out agricultural operations, how does it matter? As long as it's dividend, it has taxable under IFOS. IFOS, it is taxable 80,000. Yes. And brought forward business loss from 6 years ago. Can I carry it forward for 8 years? Yes. This is only 6 years. So do I still have time? Yes, I still have 2 years. So this is business loss, normal business, but I'm putting a quarantine stamp on this. And I'm writing 45,000. What do I mean? I mean I cannot take it outside. Let's do this. In salaries, guys, any step 1 required? No. Step 2 required? Nothing. House property, anything required? No. PGBP, do you see any loss? Yes. And do you see profits also? Yes. So can I minus it? Yes. So 1,09,000 plus 45, sorry, 1,09,000 plus 48 minus 45 will give you 1,12,000. Here, can I minus 90 from 56? No, because it is unique blood. And IFOS 80,000, there is no blood requirement. Now guys, step 3, outside. Salaries, I don't have to go outside. House property, I don't have to go outside. PGBP, there is nothing loss. Here I can't go outside, so that's it. This one will be taxable. 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 And how many losses carried forward? Only one. So let's total it up. 1,25,000 plus 1,12,000 plus 80,000 plus 56,000. That is 3,73,000, which is here. And 90,000 will be carried forward. So you'll write a note that 90,000 will be carried forward. How many years you can carry it forward? Let's see. This is capital gain. So under section 74, you can carry it forward for 8 years, provided you file your return of income on time. Interesting question, guys. The next one. Again, there has lots of different incomes. So this is Sohan. It has different incomes here. Salary, house property, business, capital gain, IFOS. Let's do it well. First, income from salary computed 3 lakh. Next, loss from let out house property 40. So house property, there is a loss of 40. Income from sugar business, that is normal business, guys, 50,000. Loss from iron ore business, discontinued a couple of years back, 16, 17. So can I carry it forward? 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 5th year. So can I carry it forward? Yes. But it will have a quarantine stamp. Normal business, 1,20,000. But it will have a quarantine stamp. That means you cannot go outside. Yes. Short-term capital loss, 60,000. Long-term capital gain, 40,000. dividend 5,000, income from lottery, no one can touch this, casual income of 50,000, so I'm anyways putting this in a box. Winnings from card games, again 6,000, so I'll just make this 56 only. Agriculture income is exempt, so I'm not even writing it. Short term capital loss, so this is short term capital loss. We already had one, we'll add another one, 10,000. And bank interest, so this is your bank interest, which is 5,000. Guys, here is your table. Now let's look for losses. Salary, there is no loss. House property, there is no family. This, guys, can you set off one against the other? Yes. So 70,000 remains, but it has a quarantine stamp, so you cannot take it outside. Here, guys, short term loss is 70,000. Long term is 40. Can I set it off? Yes, there is no unique blood, so 10,000 goes, and here 30,000 goes, so there is a short term capital loss of 30,000. Casual income, no one can touch, there is no blood requirement. Bank interest, dividend does not have any blood requirement. Now let's go outside. Salary will not require. House property, can we go outside? Yes, I can go to anyone. I can go to interest, dividend also, but I have here, so I'll go here only, 40,000. So this is 2,60,000. This 40,000 is taken care of. This 70 we cannot take outside. This 30, they are non-friendly, so they won't go outside. Everything else is okay. Now the third step, guys. 2,60,000 will be taxable. This 70,000 will be carried forward. This 30,000 will be carried forward for 8 years. This 56,000 will be taxable, and this 10,000 will be taxable. So here is your answer. 2,60,000 plus 56 plus 10,000 is 3,26,000. that is your income. It's almost a game we play, guys. 3,26,000. And losses carried forward, guys. These are the losses that are carried forward. One is 70,000, one is 30,000. So here we go, 70 and 30,000 losses to be carried forward. Perfect. Guys, looking at the next question, I want you all to try this first. This is Batra. I was just reading the brought forward losses. They are brought forward. That means, do they have a quarantine stamp? Yes. This is for horses, 25,000 loss. And this is business of textile, 60,000 loss. This is from 2014-15 assessment year. So check if it's still valid, because we are in the year financial year 21-22. Over to you all. Please try once. I'll give you all about 3-4 minutes. Take 5 also, no problem, but try before we move ahead. Guys, this is Batra, and he has some income. So 1, 2, 3, 4 and 5 as always. Short term capital gain 1,40,000. So this is short term capital gain 1,40,000. Next is loss from speculative business, unique blood. So I'm just writing speculative business, and I'm putting 60,000 in brackets, and I'm putting this unique blood here. Long term capital gain 30,000. So long term capital gain 30,000. Good, Abhi, for trying. Let's see. Long term capital loss 1 lakh. So long term capital loss is 1 lakh, and it's unique blood. So I'm just putting a star mark there. Next, income from business of textile after allowing current year depreciation. So this is normal business, that is 50,000. Income from activity of owning and maintaining race horses. So horses, unique blood is 15,000 from the current year. Income from salary 1 lakh. There is no loss, only income, and it's computed, so nothing you have to minus. Loss from house property is 40,000. Quarantine stamp, losses from activity of owning and maintaining race horses. So 25,000. This has a quarantine stamp. Anyways, horses don't go out. And brought forward loss from business of textile. So this is normal business, 60,000. But guys, this is AY 14-15, that is the year 13-14. If I add 8 years to it, so this becomes 22, 21. So this is the last and the 8th year for minusing this. Alright, let's start solving this now. First, PGBP, salary will have nothing. House property, nothing in the family, but can they knock outside? Yes, I'm going faster this time. So they will minus 40,000 here, 60,000 remains and 40,000 taken care of. This is speculative business, unique blood, so you will have to carry it forward because there is no other unique blood. And this I can minus 10,000 loss, but unfortunately I'll not be able to carry it forward because this is the last year. So it has a quarantine stamp, but I'll not be able to carry it forward this year, sorry. Next, this is unique blood. I can take 30,000 from this 1 lakh, yes. So 30,000 gone, from this 1 lakh 70,000 remains, but this is unique blood, so I'll have to carry it forward. This will wait. And horses, can I set off one against the other? Yes. So 10,000 remains, which again will be carried forward. So this 10,000 will be carried forward. So taxability, this is 60,000 taxable. This is nothing remains here. This nothing remains here. 60,000 will be carried forward. 70 will be carried forward. 1 lakh 40 will be taxable. 10 will be carried forward. So 60 in salaries, 1 lakh 40 in capital gain. So 2 lakh is the income. Let's check. Excellent, guys. 2 lakh is your income. And which are the losses to be carried forward? You can carry forward 60,000, 70,000 and 10,000, and 10,000 goes away. 60, 70, 10 gets carried forward. Excellent answering, guys. Good job. It's a game, honestly, that you play. There's nothing more to this except a game. It takes a lot of while to develop a shortcut like this, and I'm very happy. One of the shortcuts in real life also, it's helped me a lot. As a student, I always struggled with set off and carry forward, and hence I had to really figure out a way to help everyone who struggles like me. Perfect. Alright, guys, let's do this. Question number 4. Mr. A furnishes you the following information for the year ended 31st March 2022. Compute the taxable income. Without revising, we are solving. Yes, without revising, we are solving. Perfect. Good job. Compute the taxable income of Mr. A and its tax liability for the assessment year 22-23 with reasons for your computation, assuming that he does not opt for section 115 BSc. Guys, here it's a slightly different sum. It's honestly not so much about set off. It's overall nice sum. Guys, please tell me, any income that you have, will you categorize them in one of the 5 heads? Yes. 115 BSc, we'll see in computation, rates of tax ahead. Yes. So here, I'm just reading, you tell me which business is it or which head of income is it. Income from plying of vehicles, where should it be? Which head of income should it be? PGBP. And income from retail trade of garments, where should it be? PGBP. Abhi, if you're writing IFOS, let me ask you one. If you have a couple of trucks, if you have 5 trucks, will you consider that as an IFOS income, other sources, or will you consider that as your business? As your business, right? Alright. So, now moving ahead, let's see what is the income that he has calculated. As per his books of accounts, 3,20,000 is his vehicle income. So PGBP 1, 3,20,000. And what is his garment business income? Computed as per the book, sales turnover is 1 crore 35 lakhs, so 7,50,000. So how much is that total? 10,70,000. Any other head of income can you see, guys? No, this is a brought forward depreciation, but any other head of income? No. So can I say that this is my total? Do you see any clubbing? No clubbing. And can I set off unabsorbed depreciation, guys? Can unabsorbed depreciation be minused? Yes, 1 lakh can be minused. So this will be 9,70,000. This is my gross total income. Can you see any deductions under chapter 6A? No. So this is also my total income. Let's calculate the tax. He's an individual. So up to 2,50,000, guys, how much is the tax? 0. From 2,50,000 to 5,12,500. and from 5 lakh to 9 lakh 70, 20%, which is basically 106,500. That is his tax, 106,500. And on 106,500, will he get any surcharge? No. So cess into 104%. So basically his tax liability is 1,10,760. So have you calculated his taxable income? Yes. And have you calculated his tax liability? Yes. But now think about it, guys. Does he have an option of presumptive taxation? Maybe. And in that, if he has lower income, would you take that? Yes. Yes. So let's do that. For PGBP1, that is plying vehicles, always on the expressway, 44A, does it apply to him? Yes, it applies to everyone. 5 light goods vehicles throughout the year. So 5 into 7,500 into 12 months. Can someone do the math and tell me how much is the income here? Four lakh 50,000. And now, guys, retail trade of garments, can he be under 44 AD? Depending, is he an individual? Is he a resident? Assuming he is he up to 2 crore turnover? Yes. So yes, you can. 8% and 6%. Mr. A had declared income on presumptive basis in the last year. Guys, if last year you have declared under presumptive, are you in a chain reaction this year also? Yes. Assuming 10% of the turnover was received in cash. So out of this 1 crore, this is 13,57,500 in cash. That is into 6%, sorry, 8%. So 13,57,000, not 500, sorry. 13,57,000 into 8%, which is basically 1,08,560, and on the balance into 6%, which is 7,32,780. So these are my 3 incomes. Yes, let's total it up. 732,780 plus 108,560 plus 4,50,000, which is 12,91,340. Now a very simple question. Can I explain 44 AD once? Sorry, Abhi, can't explain 44 AD again. This is a fast track course. Time is very valuable. And also please understand, I am trying to explain everything. It takes a lot of effort to go back again. Please watch the recordings. Thank you. Alright. Guys, here please tell me, he has some brought forward depreciation relating to AY 2021. Guys, can I, okay, I'll explain it, just give me 2 minutes. But guys, any brought forward depreciation, unabsorbed depreciation, which section does unabsorbed depreciation come under? 32(2). PGBP. Can I minus this from these incomes, guys? In presumptive taxation, can I minus? No, you can't minus anything. So what is my total income here? 12,91,340. Guys, presumptive taxation, this is or whatever is in cash, you will do 8%, and whatever is in bank account, you will do 6%. So I have taken this turnover and I have split it into cash and bank account. Cash I have done 6%, bank account I have done 8%. Use your calculator, you will get your answer, Abhi. Alright. Now guys, 12,91,000 is the total income. Here the total income is 9,70,000. As an assessee, think which one do you want to show as your income, guys? Do you want to show 12,91,000? You want to show 9,70,000? Perfect. But for that, guys, are you breaking the chain reaction? Yes. So will you have to maintain your books of accounts and get them audited this year? And next year also for 5 years you can't take 44 AD. Perfect. Guys, that is question number 4. I'm just showing you the answer here. 9,70,000 is what he will take. 1,10,760 is the answer. I hope we got that same, 1,10,760. In exam, you don't have to show both. You have to show this and then comment that as per 44 AE and AD, it is this kind of answer, and hence he will choose this. You have to show simple like this and then give an answer which is not so big. You can just say that as per 44 AD this is the income, as per 44 AE this is the income, but you will have to maintain your books of accounts and get them audited. Question number 5. I'm just discussing unique blood, not unique blood, guys, not solving the question. Mr. Aditya furnishes the following details. Loss from speculative business, guys, is it unique blood? Yes. Income from speculative business, can I set this against this? Yes. Loss from specified business, unique blood? Yes. Income from salary computed, okay. Loss from let out, can I minus this from this? Yes, up to 2 lakh rupees, friendly but shy, yes. Income from trading business, is this normal business? Yes. Long term capital gain, is this normal income? Yes. Long term capital loss, is this unique? Yes, but can I minus long term from long term? Yes. Long term capital loss, again this is unique blood, can I minus this from this? Yes. Following are brought forward means quarantine stamp. Loss from horses, anyways horses is unique blood, so anyways they don't go out. And trading loss, trading business from 17-18, can I take it forward? Yes, but it is a quarantine stamp. Perfect. Compute the total income and show the items eligible for carry forward. 6th question done. 7th question. Mr. Garg. Income from salary, guys. Step 1. Income from business, normal business. Long term capital gain, normal. Loss from maintaining of race horses, this is unique blood. Loss from gambling, interesting, guys. Can I minus loss from gambling? No. But income from gambling, taxable. Loss doesn't matter. Only one loss from horses can be carried forward. Check off. Next, unabsorbed depreciation, guys. Can I carry it forward unlimited number of years? Can I minus it from everywhere? Quarantine stamp, will it break? Yes, it will break, except salaries. Loss from speculative business, how many years can I carry it forward? Only for 4 years. And short term capital loss, can I carry it forward for 8 years? Yes. Perfect. The 7th question, not even highlighted it, so it's not important, but I'm just reading it. Income from salaries, okay. Loss from house property, can I take it from here? Yes, up to 2 lakhs. Anyways, it is up to 2 lakhs only. Loss from cloth business, is this a normal loss? Yes. Income from speculative business, perfect, normal. Loss from specified business, unique blood, yes, unique blood. Long term capital gains, normal. Loss from card games, guys, can I take loss from card games? No, I can't. Income from betting, casual income, no one can touch it, taxable. And life insurance, we have not seen, 80C, it will come ahead. 8th question, 9th question, alright. Mr. Rajat submits the following information. Compute the total income and amount the losses that can be carried forward. He has 2 houses. House number 1, income after all statutory deductions, 72,000. Guys, this is the final amount? Yes. And current year loss, 30. Can I set off one against the other? Yes. Step number 1, section 70. Next, textile business discontinued. Current year loss, can I carry it forward or can I set it off? Yes. Brought forward business loss, can I set it off? Yes, but quarantine stamp, that means can't go out. Yes. Chemical business, textile business is also normal business. Chemical business is also normal business. Discontinued. Bad debts allowed in earlier years. Guys, if bad debts were allowed in the earlier years and now they are recovered, is it taxable? Yes, normal business income. Brought forward business loss. Guys, can I minus? Yes, but quarantine stamp. Leather business, again normal business, normal income. Share of profit in a firm in which he is a partner. Guys, is it taxable? No. Short term capital gain, normal. Long term capital loss, unique blood, which cannot be minused against any other. Contribution to LIC is 80C, which we will see later ahead in deductions. Ninth question. Compute the GTI of Ms. Geeta Alright guys, let's try and solve this. Please, you all get 2-3 minutes to try it and then we'll discuss it together. Over to you all, please. Alright, let's try to do this. Miss Geeta guys has certain incomes. Let's see what is the income. Salary received as a partner from a partnership firm. This salary, the same was allowed to the firm. So this one is a good sum actually, because this will be in PGBP. People who've written this in salary, this is not in salary, this is a normal business. 7,50,000. Guys, did you get this right? Please tell me. Yes, good. Next, loss on sale of shares which are held for 15 months. We haven't discussed this capital gain, but it's good, we'll try. As 15 months means long term, so this is long term capital loss, which is unique blood, which is basically 3 lakhs. Next, long term capital gain, so this is long term capital gain, 5 lakhs. Can I set one against the other? Yes. 51,000 received in cash from our friends in a party. So this is step 1 MISB SAT. Step 2 from friends in a party. So step 3 more than 51,000. So IFOS taxable. Yes. 55,000 received towards dividend. So 55 is dividend income, taxable. Yes. And brought forward business loss of assessment year is 12,50,000. This is brought forward. So will it have a quarantine stamp? Yes. Pretty simple guys. Can I set off this against the other? Yes. So how much remains? 5 lakh will remain. Can I carry it forward? Yes, you can carry it forward. This I can minus from this. How much will remain? 2 lakh. And this. So 2 lakh plus 51 plus 55, that is 3,06,000 will be taxable. This and these, and 5 lakh will be carried forward. So here we go, 3,06,000 taxable and 5 lakh will be carried forward. Perfect. And the last, I think the last sum guys. Perfect. Guys, do you all want to try this one last? Yes, before we discuss, please. Okay. Alright. So question number 10, Mr. P, let's do this. Looks like a simple question, 1, 2, 3, 4, 5. In the exam guys, you'll have to present it in a table. When we do the last 2 days exam question, I'll show you how to present this in a table format. Income from salary 18,000, so I'm writing 18,000 here. Net annual value of property 70,000. From this I have to minus municipal tax and 30%. There is no municipal tax, so straight 30%, which is 49,000. Income from business, normal business 80,000. Income from speculative business 12,000. Long term capital gain 15,800. There seems to be no loss suddenly. Loss on maintenance of race horses, so horses 9,000, first one loss. And loss on gambling. Guys, will I get loss on gambling? No, I will not. Depreciation allowable under the Income Tax Act is 8,000. Can I minus 8,000? Yes, you should minus 8,000. That's it guys. Yes, surprising. So 18,000 will be taxed, 49,000 will be taxed. Here 72 plus 12, that is 84,000 will be taxed. Yes, 15,800 will be taxed and this will be carried forward. Let's total it up. 18,000 plus 49,000 plus 84,000 plus 15,800, which is 1,66,800. Here we go, 1,66,800. So there seems to be some issue. No, there is something more which we've missed out on. No, we've done that already. Income from speculative business. 1 second, let me check. 18,000 is okay, 49,000 is okay, 63 they've minused. Current year depreciation unabsorbed. Where is unabsorbed depreciation given and current year given? Depreciation is 8,000. Oh sorry, we missed out on some things guys here. The details, other details of unabsorbed depreciation and brought forward losses. Unabsorbed depreciation 9,000. Can I minus that? Yes, 9,000 you can minus. Loss from speculative business 16,000. So speculative business 12,000 I can minus. This is profit, and loss is 16,000. So there is a 4,000 loss which will be carried forward. Yes. So ignore 84. 80 minus 8 minus 9 you will do, and 12 minus 16, that is 4 loss we will do. And here short term capital loss 7,800. So this is short term capital loss. Just one second. 7,800 short term capital loss. Can I minus that? Yes. So let's do it again. 18,000 here, 49,000 here. 80,000 minus 8,000 minus 9,000 will be 63,000 here. 4,000 will be carried forward. 15,800 minus 7,800 will be 8,000 here, and for 1,000 9,000 will be carried forward. So just let's total it up. 18,000 plus 49,000 plus 63,000 plus 8,000, 1,38,000. Yes, so this is the game we are playing. Perfect. Guys, one more chapter down. Really happy. This one is very interesting a chapter. PGBP. Explain PGBP. This is 80,000 profit. There are two unabsorbed depreciation, one of the current year, one previous year. I have minus those. And speculative business 12 minus 6. 12,000 is profit, 16,000 is loss, so 4,000 is the carry forward loss. Perfect. Guys, that was another chapter which is done. Now what we will do is we will enter into the world of capital gain, but after like 5-10 minutes. Guys, we are very comfortable. We are only on day 2. We have the entire day tomorrow, and we have 3 more days remaining, so there's a lot of time. So let's go very smooth and steady. I hope you are doing your work at your end as well, whatever you can. Thank you so much. I will see you guys now in 10 minutes. Let's take a 10-minute away and let's come back and let's do capital gain. Thank you. Alright, capital gain is almost about to start. I just noticed the page number is 111. Apparently a lot of people believe in good luck, and this one is ours. Let's start. Guys, the next chapter on the screen and in our fast track course is going to be capital gain. We are almost there because this is the second last head, capital gain, and then salaries, and then the heads of income get done. Set off is already done. Clubbing we will do once we finish capital gain. Guys, if you find capital gain difficult, I'm going to help you with some really good shortcuts for capital gain. So this is a chapter called capital gains. The surgeon started buying shares and selling shares. The surgeon also started buying gold, selling gold, and land and selling land and making money, and that started happening when he reached the age of when he started reaching the age of 45. So section 45 to section 55 talks about capital gains. But I don't want to discuss it in this way. I'm going to first tell you the basics of capital gain. Capital gain is of 3 parts. One is there a gain or a loss? So that means the calculation of capital gain. Yes, the calculation of capital gain, and that has a shortcut called ATSCP. These 5 letters are going to be your best friends for any capital gain sum. Yes. Once you compute capital gain, you don't want to pay tax, guys, and hence are there some exemptions? Yes, there are exemptions in capital gain. That's the next part. and after minusing exemptions, or even if there are no exemptions, if you happen to pay tax, are there any specific tax rates for capital gains? Yes, that's the third part, and this is how our capital gain chapter is divided. Let's first do the computation and then we'll move ahead. Over to us. First is ATSCP. First A is asset. Guys, today if I sell this office that I'm sitting in, is that an asset? Maybe. If I sell the laptop that I'm using, is that an asset? Maybe. So what is an asset and what is not an asset? Asset is property of any kind of property. So they've made the definition very, very wide. Property is any kind of asset. That means everything that I see around is property, yes, except 4 things. What are the 4 exceptions? But, spare, personal, land. 4 things. These are some specified bonds. Many years back the government issued some bonds which are not assets. Not assets means there is no capital gain. Because guys, in this ATSCP, even if 1 letter is missing, you cannot do capital gain. Next is stock. If I sell this office, there will be capital gain, yes, but if it's a builder and he sells this office, for him it's a PGBP, so it will not, stock is not an asset. Stock will be taxed, yes, but in PGBP. Next, personal movable items. Example, your laptop, your mobile phone, your car, your bike are all personal movable items. They will not be asset. If there is no asset, there is no capital gain. But guys, my laptop is a business asset and hence that is not here. So personal movable assets. So I am giving you examples. You tell me whether that is included in asset. But first, personal movable asset except SAT jaw. SAT jaw means sculptures, archaeological collection, drawings, jewelry, artwork and work of art. These are assets, yes. So guys, please tell me, your mobile phone, is that an asset for capital gain purposes? No. Is your laptop an asset for capital gain purposes? So when you sell your laptop, are you supposed to pay capital gains tax? No. Your bike and your car also, if you sell, are you supposed to pay capital gains tax? No. But the jewelry that you're wearing, when you sell, can you have capital gain? Yes. The house that you're staying in, when you sell that, can that be a capital gain? Yes, because that is immobile property. So personal movable items. And land, which kind of land? Rural agriculture land. I told you when we were doing agriculture income that sale of rural agricultural land is not taxable, not because it's agriculture income, but because it is not an asset only. Guys, all these 4 items, are they asset? No. So will there be capital gain? No. That is what is asset. Guys, most of the times in the exam, the things will be assets, yes. In your lifetime, you want to own 214 assets. So this is the definition of assets, section 214. Next. I'll just go to the chapter only, 1 minute. Next is transfer. Guys, transfer, they have not said sale of an asset, they have said transfer because transfer is a slightly bigger term and has bigger definition. For transfer, the shortcut is Sir extinguished and compulsorily converted 0 coupon bonds. That's the shortcut. Yes, Sir extinguished and compulsorily converted 0 coupon bonds. So what is Sir? Sale, exchange and relinquishment. That is Sir. What is relinquishment? Relinquishment means giving away your right. If I am giving away my right in my house to you, that is relinquishment. That is also a transfer. Next, extinguishments of right. If my office unfortunately gets caught in fire and gets destroyed, even that is a transfer. When I get money from my insurance company, that will be a transfer subject to capital gain. Sir extinguished. Any compulsory acquisition, I told you guys, the government can compulsory acquire your assets, but don't worry, they will not throw you out, they will pay you money, and that will be subject to capital gain. Yes, Sir extinguished and compulsorily converted. Conversion. Conversion of what? Here in capital gain chapter, so conversion of capital asset into stock. But how can you tax me on this? I have not even made money, I have just converted my asset. Example, if I have a house, I have just converted into a stock. When I sell my stock, I will make money. So yes, when you sell your stock, we will calculate and we will charge you tax, but at least this is a conversion, is a transfer. And Sir extinguished and compulsorily converted zero coupon bonds. I told you zero coupon bonds, guys, in today's session. In the earlier PGBP session, I told you the surgeon had given zero coupon bonds to the investors, and the surgeon incurred 15 lakh rupees or 15 rupees per zero coupon bond. So the investors earned 15 lakh rupees, and when they redeemed the zero coupon bonds, they redeemed it for 100 rupees. They had bought it for 85 rupees. So this 15 is their capital gain. Yes, zero coupon bond redemption. So Sir extinguished and compulsorily converted zero coupon bonds. That's the shortcut to remember all the different transfers. Do you need to by heart the sentence? Maybe, but they will not ask define transfer in the exam. But you should generally know what are these transfers. Also, guys, there are two deemed transfers, which is very easy to understand. Deemed means they don't look like transfers, they are transfers. Example, if you buy shares in a cooperative housing society or you sell them, that means you sold the house. And if you buy or sell a house which is not registered, even if it's not registered, as long as you paid the money and you've taken the possession or given the possession, it is a deemed transfer. So that is T. Yes, so we are done with A and we are done with T. Next, S. All you need to find out are these 5 letters in the exam, and the moment you find out these 5 letters, you will get your answer very, very easily. Next is S, sale consideration. Guys, whenever you sell an asset, the higher the sale price, the more the gain and the more the tax. Who wants to pay so much tax? So while you will want to sell it at a higher price, you will show it on paper very low. So you will want to manipulate the sale price. Yes. And hence the government says that whatever is your sale price, we will check it. The first section here of checking is section 50C. 50C, C is for checking. And this section, guys, is very, very simple. This only applies to land and building. And this is very similar to section 43 CA, which we saw in PGBP. As a builder, when you were selling a 1 crore house for 75 lakhs, did you get taxed in PGBP? Yes. Same way, now you're not a builder, now you're any other person who's holding it as an asset. Example, you're an individual who's selling the 1 crore house for 75 lakhs. Same rules apply. They will take the sale consideration, they will multiply with 110%, and if your stamp duty value is within that range, congratulations. Otherwise, they will take the stamp duty value as a sale consideration. Same concept here as well. Here it is called 50C. Next, if you're selling unlisted shares, guys, what are unlisted shares? Unacademy right now is not listed on the stock market. So if you have shares of Unacademy, those are called unlisted shares. And those unlisted shares, when you sell, you can manipulate the sale value. And hence, in case of unlisted shares, they ask a CA that, hey CA, please tell us the fair market value. If you are saying sale consideration is 100, but the fair market value is 180, they will take 180 to calculate your capital gain. That means you can't fool the government. No, they will take the FMV of the asset. Yes, this CA example is just a joke to remember section 50 CA. This 50C is only used for land and building when sold as an asset, and 50CA is only used when you sell unlisted shares. Is there a 10% margin here? No, no 10% margin here. Whatever is the fair market value, if it's more than what you are quoting, then that will be the sale consideration. And third, if you act smart and you say, listen, I can't determine the sale consideration. Example, I am selling my house for a rare piece of diamond, and I tell them that, listen, I don't know the value of this diamond. Then in that case, if you don't know the value of this diamond, we will determine it under section 50D, where we will take the fair market value again. So these are the 3 sections where they will check against your sale consideration. Next is cost, and then is period of holding. First we will do period of holding and then we will come to cost. So let's check. First we will do period of holding. Very, very important and a very good shortcut. The government expects you to hold the asset long term. Yes, the longer you hold an asset, the better it is, because guys, when you buy an asset today and I sell it after many years, it does not lead to change or speculation in price. But when I sell and buy immediately, it leads to speculation in price. So hence the government wants me to hold it long term. What is long term? Watch out guys. What is long term capital asset? When I hold the asset for more than 12 months in some cases, when I hold the asset for more than 24 months in some cases, and when I hold the asset for more than 36 months for rest of the cases, this is when I become long term. Yes, not exactly, more than that. Please write more than 12, more than 24, more than 36. Remember, more than 12, more than 24, more than 36. First, let's do more than 24. If you have some unlisted shares like Unacademy shares, etc., if the government of the examiner says unlisted shares, private limited company, then if you hold it for more than 24 months, basically means more than 2 years, then they become long term. And if there is any land and building, and if you hold it for more than 2 years, again they become long term. This is for 24 months. For 12 months, it becomes long term. Long term gets a lot of benefits, guys, from the government, and hence it's great if your asset is long term. And there are certain assets which become long term very soon if you hold them for just 12 months. What is it? It's called listed Zoom. What is listed Zoom? Any listed security? Yes. In the exam, if they say you bought the listed shares, listed debentures, listed bonds, listed anything, that is listed security. If they don't use the word listed, but they say STT was bought and paid, that is also listed. Any listed security, yes. Z is zero coupon bonds. That is 12 months. U is units of UTI. UTI is the government's mutual fund, those units, and units of equity oriented mutual fund. So this is mutual fund, this is UTI, this is zero coupon bonds, and this is listed Zoom. I repeat guys, what is more than 12 months? More than 12 months is listed Zoom. Very, very important shortcut. What is listed? Anything which is bought and sold on the stock market. Z is zero coupon bonds. U is units of UTI, which is a government mutual fund, and M is a units of equity oriented mutual fund. What is equity oriented? You guys are commerce oriented. You all understand science, but more commerce. So you are commerce oriented. Same way, equity oriented mutual fund is that mutual fund which invests 65% or more into equity. That is equity oriented. So if you buy any of these assets and you hold it for more than 12 months, they are long term. These assets more than 24 months long term, and any other assets. Example, India's most favorite asset, gold. Guys, if you buy and sell gold, when does it become long term? More than 36 months. But I'm asking you a question, guys. What if this gold is a gold bond which you bought on the stock market? Then how many months long term? If it's listed, then 12 months long term. So that's how you have to understand it. 12 months, 24 months, 36 months. 36 and 24. 24 there are only two. 12 months is listed Zoom, and 36 months everything else. Yes, everything else. And why is it necessary to study long term? Why did we not study short term? Because guys, if you toss a coin, if you know what is tails, then anything else is heads. So if you know what is long term, everything else is short term capital asset. Short term does not have too many benefits. Long term has a lot of benefits. That is period of holding. And now cost. Guys, there are two kinds of costs. I'm going to the next page. There are two kinds on cost. Example, when you buy a house, the price that you pay for the house, the cost, plus all the associated costs like stamp duty, registration, etc., will be added to build up your cost. Let's say the cost is 1 crore rupees. That is your cost, yes. This is called cost of acquisition. How much ever you acquire it for is called the cost of acquisition. Now guys, if you bought the asset before 1/4/2001, very important guys, if you bought the asset before 1/4/2001, the Government Income Tax Act says, listen, you have an option. You can choose either 1 crore or you can choose the fair market value as on 1/4/2001. It's your choice. Generally the fair market value, if it's more, let's say 1.2 crore, will you take the higher one? Yes. Why? Because more the cost, less will be your gain on paper and less will be your tax. So hence you can take FMB. Will you take the FMB? Yes. But only in case of immovable property, that is land and building. they have put a ceiling. The FMV you can take, but it should not be the more than the stamp duty value as on that day. If the stamp duty value is 1.15 crore, then can you take 1.5, 1.2? No, you can only take 1.15 crore. I repeat, the cost that you acquire the asset is called cost of acquisition. Whatever you price you acquire it, that is your cost. But if you acquire the asset before 1/4/2001, then you can take the FMV as on 1/4/2001. But for gold, for shares, this is perfectly okay. But for immovable property, there is a ceiling that has been added recently. The ceiling is the stamp duty value as on 1/4/2001. Just one second. All right. Now this is your cost of acquisition. Guys, let's see some other cost of acquisitions for bonus share. Guys, bonus shares, as you know, and since you've been knowing this since 11th standard, bonus shares are given free of cost. So what is the cost of acquisition? 0. But what if the bonus shares are given before 1/4/2001? Can I take the FMV as on 1/4/2001? Yes, you can, which is great because any number will be higher cost than 0, and that will reduce your gain and reduce your tax. So this is for bonus shares cost of acquisition. Alright, and there's one more cost which is called cost of improvement. What is cost of improvement? Guys, if you improve any asset, example, on my house I put another floor, on my land I put a fence, that is called improvement. And if I improve the asset, can that cost also be considered? Yes, I can. So if I buy a house for 1 crore and I add another floor for 20 lakhs, can I take that? Yes. But what if my improvement is done before 1/4/2001? Then you have to ignore it completely. Yes, you have to completely ignore it. So only cost of improvement after 1/4/2001 is to be taken. Yes. And now, guys, for intangible assets include the common ones. I'll tell you: patent, copyright, trademark, then tenancy rights. When you live in a house for more than some years, you get tenancy rights. Loom hours, that means to use a particular loom. Earlier when looms were very few, you had rights to use it only for particular hours, that is a right. Stage carriage permits or stage permits, that means bus permits, bus routes, stage carriage permits, that is bus routes, that is also intangible rights. All these intangible rights, the cost of acquisition and the cost of improvement both are nil. Yes. But what if I bought the goodwill? What if I bought the patent? Then only in that case, only if you've purchased, then you'll have a cost of acquisition. I repeat again, guys, you have lots of assets. You have intangible assets also, like patent, trademark, copyright, goodwill, tenancy rights, loom hours, stage carriage permits, etc. Remember a shortcut: cost of acquisition and cost of improvement of all the intangible assets is nil. Yes. And remember the exception: only if you've purchased it, there is a cost of acquisition. So this is the concept. So I'm just giving you an example. Guys, you would have heard of a brand, let's say Unacademy. Let's say Unacademy is a brand. Okay, we'll take Unacademy example only. Unacademy as a brand, let's say they have built a trademark, copyright, a goodwill, they have built a goodwill. Is it self-generated goodwill? Yes. And if they decide to sell it for 5 crore rupees, let's say they decide to sell their brand name or their goodwill for 5 crore rupees, then what is the sale consideration? 5 crores. And what is your cost of acquisition, cost of improvement? Nil. But what if Unacademy had bought it for 2 crores? Then you can minus 2 crores. So unless you purchase, the cost of acquisition will always, cost of improvement, cost of acquisition will always be 0. But guys, here there is a small catch. This is goodwill of business. 3 crore will be capital gain, absolutely right. But guys, what if instead of Unacademy there is a CA firm called ABC, and it's a very famous name, it's every accounts book has ABC, and let's say they are selling their goodwill for 5 crores. Then in 5 crores, that is the sale consideration. What is the cost of acquisition? Cost of acquisition generally should be nil because goodwill is nil. So my capital gain should be 5 crores. But here the Supreme Court has given a verdict that in this case the cost of acquisition is indeterminable. And if the cost is indeterminable, if you cannot figure the cost, will there be any capital gain? No. I repeat guys, this could be a good question in an MCQ also. Let's try and understand. What am I saying? We're talking about cost. Cost of acquisition, whatever you paid for. Cost of improvement, whatever you added, etc. is cost of improvement. But now for intangible, cost of acquisition, cost of improvement is nil. If you purchase, there is a cost. Otherwise, either it is nil, or if you purchase, there is a cost. But only for goodwill of a profession. Is CA firm a profession? Yes. Only in case of goodwill of a profession, when they say that you sold goodwill of a profession, the cost is not determinable and hence the capital gain will not be there. Yes. I hope you understood this. Whoever has understood this, great. That is the time that I have to explain to you this. If you have any more doubts, you can reach out on Telegram, but this is the kind of doubt, this is the kind of concept that I wanted to explain. So this is ATSCP. Yes, this is ATSCP guys. Asset should be there. Yes, there should be a transfer, sir, extinguished and compulsory converted. There should be a sale consideration which they will check. There should be a cost of improvement, cost of acquisition. Remember, CA firms or goodwill of profession is not determinable, so there will be no cost, so no capital gain. And period of holding, depending upon short term or long term, it will become period of holding depending upon short term or long term will be the answer here. Perfect. Now let's go into a section which is very, very important. Let's go to a section which is called section 48. Section 48 says that, hey, if you are going to calculate capital gain, please tell me guys, till now whatever heads you've done, house property, you've done PGBP, you've done IFOS, did you have expenses you could minus? Yes. Same way here also, there are expenses you can minus. So if you are selling something for, let's say, 40 lakh rupees, there are 3 expenses you can minus. First is any expenses on transfer. Example, brokerage, etc. Can I minus that? Yes. That becomes my net sale consideration. Yes. From that, can I minus cost of acquisition? Yes. And from that, can I minus cost of improvement? Yes. So let's say this is 10 lakhs and this is also 15 lakhs. So 25 lakhs I can minus, and that will give me my gain or my loss. This is a gain here. This is capital gain. Now if the asset is long term or short term, then you'll have long term or short term capital gain or loss. Guys, this is called the computation section. So please, from now on, just like you had 3 expenses in house property, here also you have 3 expenses. Expenses on transfer, cost of acquisition and cost of improvement. But guys, please tell me, when you sell a house for 40 lakhs, this value, is it of today? Guys, I'm not getting the adequate responses that I need. I know it's been a long day for you guys, but unless you participate, how will I know if you're understanding or not? So please tell me, when you sell a house today for 40 lakhs, is this the value of this year? 21, 22? Yes. But this house you bought many years back, you bought it for, let's say, 5 lakh rupees. In the year 2008-9, is this a value of today? No. So you can't compare an orange with a strawberry. So you need to bring them together at the same level. So you do something called indexation. Is that a benefit? It is an absolute benefit. I'll show you how it is a benefit. Indexation says we will take a cost which is very low and we will inflate it to today's value. So you will take the old cost You will divide it by the CII of that year in which you got it, either bought it or got it as a gift, into the CII of that year in which you are selling it. So CII of 8-9 and to CII of 21-22. And when you do that, the value that you will get, let's say 27 lakhs, that is the indexed cost of acquisition. So this is called indexation. Yes. Can I do the same thing for improvement also? Index cost of improvement? Yes. You can index both cost of acquisition also and cost of improvement also. Guys, what if the improvement I have done last year, can I index that also? The improvement I have done last year, can I index that also? Cost of improvement incurred in the year 2020-21. Yes guys, because indexation does not depend upon this. Indexation depends upon whether the asset is long term. So if the asset is long term, if this house is long term capital asset, that is more than 12 months, more than 24, more than 36, then you can do indexation. Yes, and this will become long term capital gain. So let me repeat: 3 expenses on transfer. Expenses on transfer: cost of acquisition, cost of improvement. Can I index the cost? Yes. Both the cost I can index? Yes. Depending upon when you incurred the expense? No. Depending upon whether the asset is long term. If it's long term, you can index both. If it's short term, you can index nothing. So that means long term capital asset only get the benefit of indexation. Yes, I told you long term has many benefits. One of them is indexation. Guys, just like auditing the books of accounts, maintaining the books of accounts is in PGBP, indexation is a concept only of capital gain. Just like depreciation is a concept only of PGBP, here there is indexation. So indexation is only and only in capital gains. Perfect. This is section 48. Section 48 has 4 provisos. Please very watchful, very important provisos. What are the 4 provisos? Inflation 4%. Sorry, inflation 3%. In abroad, guys, foreign, inflation in 3%, and hence bonds are stable. This is a shortcut to remember the 4. Inflation 3%, bonds stable. First one. This is proviso to section 48. This is section 48 only, and they are provisos. First says indexation can be given to all long-term capital assets. That we already know. The moment it's long-term capital asset, you can get indexation. This is I for indexation. Next, this one says that indexation can be given to any long-term capital assets. But this one says to 3 of them we will not give indexation, to 3 assets. Which are those 3 assets? Very important, guys. Listed EUU. What is it? Listed EUU. Foreign inflation 3%, bonds remain stable. Foreign is not there for your exam, so just inflation, bonds stable. Inflation 3%, bonds stable. Alright. So inflation 3%, bonds stable. Now what is this 3%? There are 3 assets which is listed EUU. They get so many benefits that they will not get indexation. What is this listed EUU? Listed equity shares, listed units of equity oriented mutual fund, and listed units of business trust. Guys, watch out. Again, I will explain. Inflation 3%, bonds stable. First sentence says that indexation will be given to every long-term capital asset. Yes. But the second statement says that 3 assets indexation will not be given. Yes. Which are these 3 assets? Listed EUU. It's not an amendment, Andesh. Focus on the concept. There are only 4 for CA Inter. The others are at CA Final. Focus on the concept at hand, please. Alright. Guys, what is listed EUU? Listed EUU means listed equity shares like Reliance. Listed units of equity oriented mutual fund. Example, those mutual funds are oriented towards equity. And listed units of business trust, which we will do at CA Final. So although I say listed EUU, for your exam it's only listed E and U. So listed EUU, no, only listed EU actually for your exam, but remember it as listed EUU. So on Reliance shares, guys, if you buy Reliance shares and you sell Reliance shares on the stock market, will you get indexation? No. If you buy Kotak mutual funds which are equity oriented and you sell it, will you get indexation? No. So on listed UU, no indexation. What if they are long term? Even if they are long term, no indexation. Next, bonds. Guys, bonds and debentures don't change in value. If you buy a bond today worth 1000 rupees, after 5 years you will get 1000 rupees only back. So you don't change in value, they only pay you interest. So hence on bonds and debentures, because they don't change in value, you will not get indexation. Yes, you will not get indexation here as well. So first one says indexation on all long term, and then this one and this one give you exception. So on bonds and debentures there is no exception, there is no indexation except two things, except two bonds. Inflation indexed bonds, those bonds that are indexed or linked to inflation, because as inflation rises they also rise in price and hence you get indexation there. And sovereign gold bonds. Guys, sovereign gold bonds are those bonds that are given by the government, that's why they are called sovereign. And as and when gold prices go up, their pricing will also go up. So do they change in prices? Yes. So both these change in prices, and on both these indexation will be given. Yes. And last is stable, that is STT and CTT, which in PGBP you would get a deduction, here you don't get a deduction. So why not? We will only take PGBP. No guys, in PGBP you don't get indexation, here you get indexation. So you have to choose what you want. I'll repeat first this proviso. What are we talking about? We're talking about section 48. Guys, if you're missing this, you're missing out on the entire chapter. Watch out for this discussion. Okay. There are four provisos. Inflation 3%, bonds stable. Please tell me yes or no, guys. Is indexation a benefit? Is indexation a benefit? Yes. And is that benefit given to all assets? No, it is only and only given to long-term capital assets. That's the first thing. On three things, listed UU, do you get indexation? No. Why? Because they'll give many other benefits. Like what benefits? We will see ahead. But on listed UU, listed equity shares, listed units of equity oriented mutual fund and listed units of business trust, no indexation. Do bonds and debentures change in value over a period of time? No, and hence no indexation. But inflation index bonds, do they change in value over a period of time? And sovereign gold bonds, yes. So on that indexation will be given. And last, STT and CTT will not be allowed in capital gain. But in PGBP, are they allowed? Yes. Alright. So that is section 48. Very, very important section and done. Now guys, moving ahead to the next section, section 45(1). Guys, if I'm selling a house today, ATSCP, I'm selling a house today. Please tell me, is it an asset that I'm selling? Yes. Is there a transfer? Am I selling an asset? Yes. Is there a sale price? Let's say 1 crore rupees. Is there a sale price? Yes. Is there a cost price? Yes, I bought it for 20 lakhs. Period of holding, let's say I bought it 10 years back. Is it long term? Yes. So can I index the cost? Let's say index cost is this only. So is there capital gain, guys? Yes, there is capital gain. But now answer me, guys. Today is the 2nd of March. He has paid me only 70 lakhs this year. And he's told me that he will pay me 30 lakhs next year. Which year will I be taxed? Section 45(1) says you will be taxed in the year of transfer. We don't care which method of accounting you follow. Guys, method of accounting is important only for two heads, PGBP and IFOS, where you can choose. Remaining every head they will tell you. So year 45(1) says that it will be taxable in the year of transfer. So when have I transferred the house? Today. So it will be taxed in the year 21-22. Alright. Guys, this is the year of transfer, but there are some exceptions to it. I'm just talking about the exceptions. Guys, this is a fast track course, just reminding you, I'm hoping and expecting you've done chapters before, you've gone to some class before, you've read it before, and that's how I'm going to take it from. So please answer when I ask, participate, because otherwise I'm feeling that capital gain you're doing for the first time. From your responses, it just looks like that capital gain is being done for the first time. I hope that is not the case. So guys, section 45(1) says that capital gain will be in the year of transfer. But there are some exceptions to it. The first exception is section 45(1)(a). The shortcut is accident. Guys, in case of a fire, in case of an accident, when your asset gets destroyed and you get some insurance compensation, is there ATSCP? Yes, there is an asset which has gotten destroyed. You will get some money or some asset from insurance company. There is a cost of this asset and there is a period of holding, so there will be capital gain. But don't worry, we will tax it only in the year you receive the money from the insurance company, or when you receive the asset from the insurance company. So this is an exception, yes. Section 45(2). Guys, section 45(2) is when you are converting your capital asset into stock. When you are converting your capital asset into stock, there are two things happening. First was your capital asset till a particular date. After that, it became stock. Example, this office of mine, I'm converting it into, I'm becoming a construction, a real estate agent. So this is now my stock. So till it was in capital asset, you will have capital gain, and after that it will be PGBP. So you have two calculations under 45(2). How do you calculate? ATSCP for capital gain. Is there an asset? Yes. Are you converting it? Yes. Is conversion or transfer? Yes. What is the sale consideration? We don't know because we've not sold it, we've just converted it. What is the cost? Whatever is the cost of the asset, we'll know. And what is the period of holding from the day you acquired it till the day you converted it? Everything you know except sale. So what do we take? We take the FMV as on this date as the sale consideration. Yes, we take the FMV. And this FMV plays a twin role because in PGBP, when you sell this stock, let's say you sold it for 1 crore. What is your cost? Because you did not buy it, you just converted it. This FMV also becomes your cost. So FMV plays two roles. In capital gain, it becomes your selling price, and in PGBP, it becomes your cost price. So this is another exception, yes, that this calculation will happen only when the stock is finally sold. Next, the third one, 45(2)(a). The shortcut is angel broking. This is for all demat accounts. Watch out. I bought one Reliance share in the year 2019-20. I bought another for let's say 1,000 rupees. I bought another Reliance share in the year 2021 for 1,200 rupees. And I bought another Reliance share this year for 1,400 rupees. These are my purchases, and I'm selling one Reliance share in the year 21-22 for 1,800 rupees. So is this ATSCP? Is there an asset? Yes. Am I selling it? Yes. What is the sale price? 1,800. But now what is the cost and period of holding, guys? What is my cost and what is my period of holding? Because I have three different shares. So this section says follow FIFO method. First in will be first out. So my cost will be 1,000 and my period of holding is more than 2 years. So it's more than 12 months. So it's long term. Next, I'm very happy with the next one because the next one in the recent amendment by ICAI, they have removed this 45(3) and 45(4). So that brings me to the last two sections which are very important. Please see 45(5). You were sitting nicely in your garden when you got a call that your bungalow is being compulsorily acquired. They were willing to pay you 1 crore rupees for your bungalow, but you wanted 5 crore rupees. So they said you can fight it out in the court. You know, guys, you can ask for enhanced compensation. So you will fight it out, and after a few years you will get 4 crore rupees. You will also get interest, but interest goes in IFOS. Yesterday we had studied that in IFOS, and you get a 50% deduction on IFOS. So here is 1 crore. When you get 1 crore in the year of receipt, you will tax, yes, ATSCP. Is there an asset? Yes. Have you sold it? No. You've compulsorily acquired it? Yes. So that is also a transfer. What is the sale price? 1 crore. What is the cost? Whatever you bought it at, and what is the period of holding from when you bought till when it is compulsory acquired. You will do this calculation, yes, and you will get a gain or a loss. But when you get the 4 crore after a couple of years, again on the year of receipt, again you will do ATSCP, but in that case A is for asset, T is for transfer, S is selling price 4 crore. Now again, can you take the cost? No, you've already taken the cost here, so you will not take it again here. So here, but you can minus litigation expenses because all these years you would have fought a case, so there would be litigation expenses. So what is the meaning of this 45.5? How will you remember 5 crore? Remember guys, and it is taxable in the year of receipt both. Cost is only taken once, you cannot take the same cost twice. The second time you can take litigation expenses. And the next one guys, very very interesting, the next one, 45.5a. 5 additional floors. Guys, what you can see here is just a plain building, but what the builder can see that he can destroy this building and make a high rise apartment with 5 additional floors, and when he does that he will give you additional floors. So this is you who are entering into a joint development agreement with a builder or a construction company. What are you giving? You are giving your land or your small house. And what are they going to give you? They're going to give you a big building and 5 additional floors, and some space you can keep, some they will keep, and both will make money. Yes. So is this ATSCP? Yes. Is there an asset? Yes, your land. Is there a transfer? You're almost doing an exchange. What is the sale consideration? Sale means what are you getting in return? You are getting some additional space, plus you are getting some money. What is the cost? Whatever you bought the small building for, and what is the period of holding? Till you bought it, till the JDA, from the day you bought it till the JDA was signed. Now guys, this building is going to come up not in this year but after 3-4 years. So why should you be taxed today only? So hence the government says don't worry, here we will tax you in the year of construction completion. So these are exceptions, yes. So whichever year the construction is completed, let's say 2024-25 it's completed, that year we will tax you. And at what rate? What will be the sale consideration? On the date of CC, whenever you got the completion certificate, that day's stamp duty value we will take. And for the money you will take, let's say you got 1 crore rupees, so 1 crore plus the stamp duty value as on that date for the additional space. That is your sale consideration. Sale consideration, if I give this pen for 10 rupees, I'm getting 10 rupees. What am I getting is sale consideration. So that is a sale consideration here. What is the exception here? First, it will be taxable in the year of CC, and the stamp duty value will be taken as the date of CC. That is an exception of 45.5a. This came in the exam this year in December 21. Perfect. Guys, next is a section called section 46. Guys, section 46 is a beautiful section, but it's a very simple one. It's not very difficult. This is Kingfisher Airlines, a company which has gone into liquidation, but this is the surgeon and he had shares worth 10 crores in this company. So he went to the company, listen, I am a big shareholder of yours, I need money for my shares. They said, we don't have money, we are in liquidation. The best we can do is give you a plane in exchange. So we give you an airplane in exchange for 12 crore rupees, whose FMV is 12 crores, and you gave us shares worth 10 crores. Just 1 second. Is this ATSCP? Just 1 second. Perfect. So for Kingfisher Airlines, this is ATSCP. Yes, because there's an asset, airplane, there's an exchange. What they're getting in return are shares, the cost of the airplane and period of holding. But because they are under liquidation, the government says, how can we tax you? So they will not be taxed any capital gain. This is section 46.1. But in case of a surgeon, 46.2 is their ATSCP. A is asset, T is transfer, they're doing an exchange. Exchange is also a transfer. What he's getting in return is an airplane worth 12 crores. What he's giving up, the cost is 10 crores. The period of holding is how many months or how many years he's held the shares. So he will be charged capital gain. Yes, that is section 46. 46.1 is no capital gain. 46.2 is capital gain. Now guys, something that confuses people, but I just want to tell you that it's not that important, is section 47, at least at CA inter level. But I will still tell you what is the significance of section 47. These transactions, they look like transfers, but they are not transfers because the intention is not to make money. Let me give you examples and let me give you illustrations. First is HUF. If the HUF, Hindu undivided family, gets partitioned, and on partition they give the members some assets, that is not to make money, but that is only because they are getting partitioned. So this is not subject to transfer and no capital gain. Next, when there is a gift will inheritance, 47 is taxable. No, 47 section is not taxable because there are no transfers. Next, 247 is a transfer. 47 section is not a transfer. It's no capital gains. I hope that's clear. Perfect. Next, guys, if let's say your grandfather is very old and he gives you a gift under a will or an inheritance, he gives you a gift or a will or an inheritance, he gives you an asset, then from his perspective, is it a transfer to make money? No. So no capital gain. Guys, remember, like gift taxation is from receiver's perspective, capital gain is always from the giver's perspective. Next, if there is Reliance, that is the father, and they are giving an asset to their son, Reliance to Jio, and again the intention here from father to son is not to make money, so this is not a transfer, provided it's a wholly owned subsidiary. Jio is a wholly owned subsidiary, and the entity which is receiving it, like Jio, is in India. Same way, when Jio gives a Reliance, the son gives an asset to the father, the intention is not to make money, so hence this is not a transfer, provided again it's a wholly owned subsidiary and the Indian company is receiving it. That means assets should not go out of India. Next guys, now Vodafone and Idea have amalgamated. So when Vodafone transferred their assets to Idea, the idea was not to make money, the idea was to amalgamate, and hence this transfer is also not a transfer from capital gain perspective. Same way, when a shareholder of Vodafone got shares of Idea, the intention was not to actually sell shares of Vodafone and buy shares of Idea. It automatically happened because of amalgamation. So any amalgamation and merger transfer is not capital gain. So these are typical examples, guys, of transactions that look like transfers. Are they important? Not at all from your exam perspective. But don't remember the section, just remember the concept. If these transactions arise, like HUF on partition to its members, gift with inheritance, father to son like Reliance to Jio, Jio to back to Reliance, Vodafone to Idea, amalgamation in case of shareholders or the company level, and merger also, all these transactions will not attract capital gain because these are not transfers. So no transfer and hence no capital gain. Alright. Next, so ATSCP is done. We are only doing the other minor sections now. 1 minute. Perfect. Guys, now doing one more section which is important, section 50. This section is where capital gain meets PGBP. The two sections meet. It's like Ganga and some other river meeting. Same way, capital gain and PGBP meet at section 50. What does this mean? In PGBP, you have block of asset. Example, you have 4 ambulances for 40 lakh rupees. If you sell one of the ambulances for 10 lakh rupees, what will happen? Nothing, just minus, and on the balance amount you continue depreciation. Perfect. So this is block of assets, so PGBP, and this is sale of an asset, so capital gain. But what if the entire block is sold, guys? What if all the 4 ambulances which are for 40 lakhs are sold? Let's say you are selling them for 32 lakhs. So just think logically, guys. 40 lakh assets sold for only 32 lakh. So there is a loss of 8 lakhs. So this is a capital loss. And if these same 4 ambulances which are for 40 lakhs are sold for 46 lakhs, then congratulations, this 6 lakh is a gain. Yes. So when the entire block is sold, either it will lead to a loss or it will lead to a gain. This concept is under section 50 and where PGBP meets capital gain. Yes. Why? Because block of asset is PGBP and selling them is capital gain. So when the entire block is sold, you will either have a loss or you will have a gain. Now when part of the block is sold, you will have 30 lakh and you will continue depreciation. Yes. But guys, I'm giving you one last unique situation where let's say 4 ambulances for 40 lakhs and just one ambulance has a number 786. So there is one guy who collects these numbers of cars. So he bought that just one ambulance for 41 lakh, just one ambulance for 41. So will you have 1 lakh of gain? Yes. But there are 3 other ambulances. Will you continue depreciation? No, you will not get depreciation now, because anyways he's bought one of the asset for more than the block value. So this is capital gain. This will continue depreciation, but this is capital gain. I'll repeat this one last time. What is this? Section 50, where you're selling part of the block or you're selling full block. If the full block is sold, nothing remains. So either there will be a loss or there will be a gain. And if part block is sold, then it will either be continuing depreciation, or if one crazy guy buys it at a very high price, one of the assets, then the remaining assets, there will be no depreciation and there will be capital gain. Guys, all this, whether it's a loss or a gain, will be short term. Why? Because these are depreciable assets. And depreciable assets means they are at current value, so hence all of them will be short term. This is section 50. Next, guys, is something that was asked in the December paper, so watch out. And there is an amendment also. The next one is section 50B. But before that, guys, just let me think through. Just one second. Where are we on our completion? Guys, we are done almost with capital gain. About 30% is remaining. So we can comfortably complete capital gain. Then we have clubbing of income, which will not take us more than maximum 1 hour maximum. Then there is salary. And these 3, I think we can comfortably complete in tomorrow in the first session. Then we have deductions, which we can do. And then we can do TDS. So deduction will take us about 1.5 hours, and then we can do TDS. So this will happen tomorrow. That leaves only TCS and return of income and some rates of tax for the third last day. Okay, so what I want to do is, guys, I don't want to push too much. I just want to finish this last concept on the screen, and then we will call it a day, because I feel that it's getting a little too much for one day. So no problem. 90% will complete tomorrow. 90%, yes, because TCS, advance tax, and some return of income will remain. But yes, there will be something for 18th, and then 20th and 21st will only be sums. So that's the idea. But right now, guys, if you've started this, let's finish it. This is called Slum Sale. Very important, and it was asked in the last December exam. What is Slum Sale? Slum Sale is when you don't sell your entire business. My example here was Britannia. Britannia has 2 businesses. One is biscuits, which we all know, and one is transport, which is a loss making unit. So they wanted to sell the transport department. The transport department, they asked for people, and Baba Ramdev said, I will buy it for 50 crore rupees, your entire transport undertaking. Yes. The transport undertaking, ATSCP. Is there an asset which is being sold? Yes. Not just one, the entire undertaking. Yes. Is there a transfer? Is it being sold? Yes. What is the sale price? 50 crores. What is the cost of this undertaking? We don't know yet. And what is the period of holding? We started this undertaking many years back. If it's more than 3 years, it becomes long term. So this is long term. Now, what is the cost? The cost, they say, should be the net worth of this undertaking, not of the entire business, only of this undertaking. What is the net worth? So net worth means assets minus liabilities. So what are the assets? The assets, let's say, could be land, which you will take book value because land is never depreciated. For the other assets, you will take WDV. Yes. So this is how you will get your assets. And liabilities, you will take liabilities of only the transport undertaking, and assets also only of the transport undertaking, and you will get the net worth. Remember guys, you have to take the WDV for others, and for land which is non-depreciable, you have to take the book value. Any depreciation, if you've forgotten, in the exam they had forgotten the depreciation, that was the question. So you have to take depreciation and find out the net worth. So let's say the net worth of this undertaking is 30 crores. So 50 crores is the sale consideration. Any expenses on transfer you can minus, yes. Then from that you will minus 30 crores and you will get your answer. 20 crores is your long-term capital gain. Perfect. This is what was a slum sale. Guys, slum sale, some common things, some important things I want to tell you. Even if it is a long term, will you get indexation? No, you don't get indexation for slum sale. So there are 3 things on which there is no indexation. One is listed UU, no indexation. One is bonds and debentures, no indexation. And one last thing is section 50B, no indexation. These 3 things, even if they are long term, you don't get any indexation. Guys, here, if it's long term, more than 3 years, then long term, and over the entire undertaking, not just one asset. And here, what is the amendment here, guys? People were manipulating this. They were faking the sale consideration. Baba Ramdev was paying 50 crores, but on paper they were only showing 5 crores. So that was the manipulation. So the government said either 5 crores or the market value of all the assets. So either this or the fair market value of all the assets, whichever is more will be the sale consideration. So are they checking this also? Yes, they're checking this also. That is the amendment, yes, and that's the reason there was a question in the exam last year, December 21. Perfect. So this is capital gain till now. Guys, tomorrow's agenda is on the screen. Capital gain, clubbing and salaries. This is what we will do tomorrow in the first half. Capital gain should not take us more than about 1 hour to do with the sums. Clubbing will take us another 40-45 minutes with the sums. And then whatever time remains is for salaries. Guys, honestly, I don't want to push because we have 3 more days waiting for us. So, and I want to complete all the sums also in the module. So hence, we will continue tomorrow, not today. In case you have any questions for me, I'm right here. So if you have any doubts, etc., you can ask me. I'm going to be logging off after complete session. But any Q&A, we can open it up right now. Otherwise, thank you and good night, guys. See you guys tomorrow. Today's day was slightly heavy, I felt. But tomorrow, I'm going to be a new city. I'm starting a new batch day after tomorrow. And tomorrow will be a different session for me. We'll start at 2:30 and we will continue. And then we will see how it goes. Thank you so much and good night and see you guys tomorrow.